The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Welcome, everyone, to Breakout Investing. My name is Ken Shreve. It is a great pleasure to be hosting my first show on the TFNN radio network. I'd like to give Tom O'Brien from TFNN a big thank you. I'm very excited. My show is going to air every Tuesday and Thursday from 3 p.m. Eastern to 4 p.m. Eastern. And again, I'm very excited to be here with you today. If you go to the homepage of TFNN.com, news hit yesterday that I launched a new newsletter at TFNN.com called Ken Shreve's Ultimate Growth Stocks. It is a growth stock investing newsletter. You can get a free 2-week trial, again, on the homepage of TFNN.com. For those of you who don't know me, I've known Tom O'Brien for many years. I started coming on his show probably in 2005, thereabouts, and went on the show for 5 years, was a frequent guest. I got my start at Investors Business Daily in the mid to late 90s, and had a real good run there. I was there for about 12 years. Had the chance to launch Investors.com. It's really where I learned how to invest, and my growth strategy is completely based on the teachings of Bill O'Neill, the founder of IBD. So it was a good run, 12 years at Investors Business Daily, and in December 2009, I went over to the street. Jim Cramer asked me to come over there to write a newsletter, and I continue to contribute videos and things like that to the street, and I also do some writing for realmoney.com. But the story right now is my new relationship with TFNN.com. Again, my show will air every Tuesday and Thursday from 3 to 4 p.m. Eastern Time. So why don't we start by just taking a look at what is going on in the market here. First of all, Thursday's performance, very, very bullish. The market had been sort of flatlining. The indexes were pretty close to their 50-day moving averages, not making a convincing case they were going to want to find support there, but I was very encouraged by the action yesterday in the market. Nice percentage gains. Volume has been light in the market for some time, but we did get a little bit of a volume push in the NASDAQ yesterday, 2.1 billion shares. Not great, but we'll take it. So a nice percentage gain for the NASDAQ, and also volume very light on the New York Stock Exchange at 1 billion shares, but still higher than the prior session's levels of 850 million thereabouts. So a bullish day for stocks on Thursday. We're extending gains today. Tech stocks are outperforming. NASDAQ right now is up about 0.5% to 2817. It cleared a key technical level today at 28.15. Volume right now looks like it's going to come in lower than Wednesday, which is disappointing. You'd like to see a little volume, following through after Wednesday's gains, but and NASDAQ up 0.5%, S&P up 4%, 0.4% to 1335. The S&P 500 has not technically broken out yet. It really still looking for that index to cross the 1339 level. The Dow currently at 12,482. That's up about 2%. So, by and large, I think the market's face certainly changed back on March 23rd, March 24th, when we saw that sign of strength in the NASDAQ. There were a lot of real solid breakouts happening around that time, and even headed into this week when the market was really kind of not sure which direction it wanted to go. The one feather in the bull's cap, I think, was that the leading stocks, all of your growth stocks that were breaking out of bases on or around March 24th, were really showing no signs at all of breaking down. In fact, those that moved strongly in recent weeks were holding on to gains. They were moving sideways, really showing perfect price action post-breakout. So I was encouraged by that action. Again, it wasn't really clear to me headed into yesterday which way this market wanted to go, but I think after Wednesday's strong performance and a little bit of follow-through today, I think there are reasons to be optimistic that we could move a little higher from here. Earnings season last week did not get off to a great start. We had disappointing results from aluminum maker Alcoa. Then it was Google that has really been in a world of trouble. Their earnings weren't great, and then J.P. Morgan sort of kicked things off in the financial sector with a lukewarm report. Bank of America, not great earnings. Goldman Sachs earlier this week had a decent number, but the financials there's still a lot of uncertainty about when real revenue growth, year-over-year revenue growth, is going to return in that sector, similar to really what we're seeing in the home building sector as well. So I wanted to just, again, I introduced myself. I spent a lot of time at Investors Business Daily, but I also wanted to let you know about my newsletter, Ken Shreve's Ultimate Growth Stocks. Again, you can get a trial right now on the homepage of TFNN.com. But I wanted to just talk for a little bit about my strategy, how I approach the market. Again, my training in the market was 12 years at Investors Business Daily, so I had the opportunity to teach a lot of workshops. I had a lot of opportunity to work alongside some very smart investors at that organization, and I will always be thankful for the experiences that I was able to get there. I'm a growth investor. I have no interest at all in trying to buy low and sell high. I realize that puts me in the minority. Everybody tries to get stocks on sale. Everybody's trying to make money in Google, trying to catch a falling knife. People are trying to make money in Cisco Systems, trying to buy stocks on the way down, trying to catch a bottom. That's not how I grew up learning the market. I really tend to focus on what I consider the quality merchandise in the market. I just talked about how earnings season got off to a really rough start. Well, companies like Alcoa, J.P. Morgan, and Google, these are companies where earnings and sales growth and general balance sheet issues are questionable. Growth prospects aren't really bright. They're certainly in question. This week, and the following week, we're really going to start to see a slew of higher quality companies with much better balance sheets. And Apple is a very good example. I'll get into its earnings report in a little bit, but I tend to focus on companies that are innovating with a new product or service that is really showing good bottom line earnings growth in recent quarters and strong top line sales growth in recent quarters as well. You like to see a profit margin at or near a peak level. Return on equity is a good way to differentiate companies that have real solid management teams that are executing a growth strategy, as compared to those companies with lower return on equity that are not generating bang for their buck. So like to see high return on equity, good growth in recent quarters, like to see good annual earnings growth as well. I use a combination of fundamental and technical analysis when picking stocks. I don't use one or the other. I don't say, well, this company has high return on equity and shows consistent earnings growth, because if it's near a 52-week low, I'm not going to be interested in that stock. So I want strong fundamentals, but I also want good price and volume trends in the chart. Doesn't necessarily mean I buy a stock as it's hitting a new high, but I tend to buy stocks when they are close to new high ground. And technical analysis as well that I use has me buying stocks not only when they're at or near new highs, but when they are coming out of a consolidation phase. So, great stocks are going to go up, and then they're going to pull back with the market. Sometimes they're only going to correct 5 or 10%. Other times, if the market pullback is steeper, they could correct 15, 20, 25%, 30%, and then they start to retest their former highs. And if you start to see signs of institutional buying on the way back up, if you start to see volume start to expand and a potential breakout taking shape, that's when I like to focus my buys. So I use fundamental and technical analysis. Again, I don't like to buy low and sell high. I really, it boils down to buying high and selling higher. I'm a top-down investor as well, which means that I pay a lot of attention to what is going on in the major stock indices to help me know when to be in the market and when to be out of the market. I try to focus my buys when the market is trending higher, when I start to see signs of, heavy volume declines, signs that institutional investors may be, taking profits in some of the market leaders, then I turn defensive and I will start to raise cash. So that's how I'm going to run the model portfolio with Ken Shreve's Ultimate Growth Stocks. Another, key thing that I do is I keep losses small. There are times when I buy a stock. Anytime I buy a stock, the goal is to buy a stock and hold it for a long time. When you buy a big leader, you want to be able to participate in the big run. And if you buy it at the right time, chances are you're going to be able to do that. Now, what happens is people sell their big winners too early. They get a quick 10 or 15% gain. They're concerned about higher oil prices. They're concerned about this negative headline or that negative headline. And what ends up happening is they take a quick 10% gain, which is fine. There's nothing wrong with taking a profit in the stock. But then the stock keeps moving higher and higher and higher, and you say, oh, why did I sell it? The problem with selling a big leader too early is that it's often very hard to get an additional entry point. Because what happens is they start to get more and more extended past a proper entry point, and I'm really seeing that a lot recently, especially in some of these stocks that broke out sharply on March 24th and have been moving higher. And I'm maybe thinking a name like Lululemon, a Priceline, a Baidu, some of these Chinese stocks that have been doing very well. By the way, Cena down pretty hard today on a downgrade from Goldman Sachs to sell. I don't know if that was a surprising downgrade or not, but it sure had been a rocket ship in recent weeks. But Goldman downgrades Cena to sell, and the stock was under quite a bit of pressure today. So that's pretty much how I run, how I'm going to be writing the newsletter. The newsletter is going to be updated every Tuesday, and I'm going to send out email alerts on every week. So some weeks there may be one, some days there may be two where I'm buying or selling a stock in the model portfolio, and the newsletter is going to run very similar to the way it did when I was writing it for the street. So I'm excited about the launch of Ken Shreve's Ultimate Growth Stocks, and I'm going to try to put together a little update for you this Tuesday, sort of my take on the market, maybe some names I'm watching. But you'll quickly realize, for those of you who aren't familiar with how I approach the market, I think you'll quickly become familiar as to how I do things. But it's really about buying quality and focusing on the quality merchandise, focusing on the strong performers, and making sure that I'm buying at the right time. Okay, when we come back, I want to talk about a couple of earnings reports that hit today and yesterday.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back, folks. You know, I just realized I haven't even given out the phone number to the show. It's 877-927-6648 if you want to call and ask a question. Have a few questions coming in from listeners in the Tiger's Den. Joe asked, do I use stops? Yes, I protect capital. If I'm wrong on a stock, I admit that I'm wrong, and I will get out before a small loss potentially turns into a big one. Again, that is a common practice taught by Bill O'Neill at Investors Business Daily, and I think it makes a lot of sense. So I will sometimes limit a loss 3 to 4% below my purchase price, or sometimes I may let it go 8, 9, 10%. It really depends on a case-by-case basis, but I do believe in protecting capital, and I'm never afraid to admit when I'm wrong and I have made a mistimed buy, because it does happen. Okay, old friend of mine. I haven't talked to him in a little while. Basil Chapman. People on the TFNN radio network know Basil very well. And let's go to Basil right now. He's got a question, I think an Investors Business Daily related question. Basil, how's it going?
Hi, Ken. Love to. This is fantastic that you've joined the team here, and I'm sure it's going to be a great success, and we're all looking forward to this. And I've always admired your analysis, and I have a question for you here. On the IBD top, let's go to the top 20. Have you found in your experience, do you have perhaps an internal indicator or some kind of proprietary indicator that tells you when a certain group is hitting the top 20 frequently, as you had the housing stocks going to the 2005 top, or the oil stocks later on, or even when you got the agricultural stocks, or even the apparel stocks. Is there something that just either strikes you that says, hey, wait a minute, I think I'm starting to get signals that tell me either this is becoming extremely overbought? Is there something that tells you to be careful in that particular instance? Because right now we have a very mixed top 20. You've got apparel, you've got oil, you've got one silver stock when silver's at record highs. Is that a question that you don't have to answer that right now? It's just a question I wanted to pose because you've got the experience if anyone has.
Yeah, well, a lot of the screens in Investors Business Daily are based on industry group relative strength. For example, a lot of your stocks in the IBD 50 tend to be strong performers in a leading industry group in the market. Now, there are some industry groups. I think Investors Business Daily still ranks 197 industry groups based on 6-month price performance, and it's true that in your top 25% of the groups, you're going to see a lot of stocks that have made big moves already and are extended past proper buy points. So anytime you're evaluating an industry group, you want to look inside at the leaders of the group and see where these stocks have been in recent weeks and how much of a price move have they made. When you're looking in maybe the top 40% of all groups, you're still going to see groups in there that are garnering strength, that are that have stocks that are in the process of building bases and consolidating gains and starting to retest highs, and those are groups that are worth paying attention to. But overall, people want to know the industry groups that are gaining momentum in the market, those that are kind of climbing through the rankings, say from 150 to 100 to 50. And, the only thing I would say is that most of the screens in Investors Business Daily are going to give you stocks in leading industry groups. And I use these screens all the time to do my fishing and to find the best stocks. But, an industry group is only as strong. You don't want to be in, just because a group ranks number one and is the top performing industry group over the past 6 months, doesn't mean that there are any stocks in there worth buying, because many may be 20, 30, 40% past proper buy points.
So the answer really is that you look at the individual stocks within the groups, within the sectors that are most favorable, and within that you'll find the ones that you still like, and that is almost like a separate analysis on each stock. How they are doing.
Well, I mean, if exactly. I mean, if Investors Business Daily tells me that the ABC Group ranks 20th out of 197 groups that they rank, I mean, that tells me, well, this is an industry group worth checking out. But I have to look inside the group and see who the leaders are and see, are they poised to break out? Are they still kind of charging up, or have they already made big moves? That's the way I've always done it, and I think it's probably the best way to do it, because people make that mistake of just buying stocks that are too extended. I mean, the train left the station several weeks ago, and they're buying up at a price level where they shouldn't be buying.
Good. Thank you very much, and good luck. Thanks for being here, Ken.
Thanks a lot, Basil. Okay, folks, we will be right back. And again, I want to talk about earnings from Apple.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gartley, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You'll receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gartley. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Okay, welcome back, folks. Ken Shreve on the TFNN radio network. Welcome back to Breakout Investing with Ken Shreve. I wanted to touch on Apple's earnings today because late Wednesday, the company really reported another fantastic quarter. The market really had it wrong with Apple. Here was a stock that corrected from about 364 down to 320. There was a lot of volume during that decline, and normally when you start to see heavy volume pick up to the downside, it is a sign that big investors are starting to, rethink their position in the stock, and this is what I pay attention to. If I'm long Apple and I start to see signs of institutional selling like this, it's worth paying attention to. And Apple broke below its 50-day moving average, and it kept heading lower down to about 320. And then it started to rally ahead of earnings. And once again, I think the number, we probably knew the numbers were going to be good. You had a 92% increase in earnings from a year ago. Sales were up 83% to $24.7 billion. You have to remember, Apple is a company with a market cap now of about $324 billion. And this is a company that has delivered accelerating sequential revenue growth for 6 quarters in a row now. And by sequential, it means they just reported their fiscal second quarter numbers. Well, that 83% growth was faster than the prior quarter's growth of 71%. That was faster than the prior quarter's growth of 67%, which was faster than the prior quarter's growth of 61%. So remember, you hear all this talk about companies, not returning to top-line growth yet, and you hear all these bears ahead of earnings season talking about, big earnings increases are there, but the revenue growth is still disappointing. Well, the revenue growth is disappointing in companies that tend to report disappointing revenue growth. Now, there are plenty of stocks in the universe that I follow, and Apple is one of them, where revenue growth is not the issue. And Apple proved it again after the close yesterday when, the numbers were just fantastic. They sold 18.65 million iPhones in the quarter. That was more than double the year-ago quarter. The real story, Mac sales, their Mac computers were up 28% year-over-year to 3.76 million. The iPod media players, not as big a chunk of business as it once was. They slipped 17% to 9.02 million. And the iPad sales were a bit disappointing at 4.69 million. Estimates were right around that 6.3 million, but there were some manufacturing constraints, which obviously the market is not too concerned about the miss there because the stock is up, I think about 3% right now to 352, and most are saying that the current quarter, their fiscal third quarter, the iPad sales are really going to start to ramp up. I was on the call yesterday with CEO Tim Cook, and he really downplayed supply constraints that the market probably was concerned about when the stock was falling from 364 down to 320. He said that supply constraints have not been an issue yet, and in the current quarter he doesn't really seeing it have a major impact. But he did say that when they report earnings again 3 months from now, that he would comment on what it looks like, and he will give an update. So very nice numbers from Apple. What's interesting is that Apple is a stock that is currently still in a consolidation. I'm not calling today's move a breakout. It still has some resistance levels, some prior highs that it needs to get through. 354 is a level. Then you have 362, 360, 364. But it looks like this stock is being accumulated again. You had a bullish day in the NASDAQ yesterday. So I think that if this market can hold itself together, I wouldn't be surprised to see Apple go higher. We will be back in a moment. The number is 877-927-6648. We'll be right back, folks, and talk to you in just a few.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale on Amazon.com for only $27.88.
Welcome back, folks. Ken Shreve here. Breakout Investing with Ken Shreve on the TFNN Radio Network. The number is 877-927-6648. I need to apologize to Jim in Akron. He's been on hold too long. Jim's still trying to get used to the routine here, looking at my messaging with my producer, the clock, so I appreciate you staying on hold. And you had a question about a couple of ETFs?
Yeah, ETF...
that was the TLT.
Yeah, TLT versus the.
So whether or not to be bullish on treasuries or bearish on treasuries at this point with QE2 ending, is that the gist of it?
Correct, sir.
Yeah. Well, I mean, my take, on bond prices, I think that things are going to change when QE2 ends at the end of June. I would say that right now I think the prospect for higher interest rates is very real. I think the potential for a strengthening dollar is also very real in the second half of the year. But I think that is still makes me bullish on stocks, because if money is coming out of the bond market and pushing rates higher, I still think it could find a way into the stock market. So I just think the weak dollar story, and I really don't see QE3. I think the Fed is going to keep that as an option. There are still obviously concerns about the housing market and the high unemployment, and legitimate concerns by the Fed, and inflation as well. But I think the weak dollar story is getting long in the tooth, and I'm expecting higher interest rates and a stronger dollar towards the end of the year. I still think the market can do well, though.
And what about the dollar?
I'm sorry?
The dollar?
The dollar. Well, again, I think that this strong commodity, weak dollar story has been going on for a long time, and I think that trade is starting to get long in the tooth. So it's not a trade that I'm actively pursuing, or that I will be actively pursuing in my newsletter. I don't expect. I think that the dollar has been weak for a long time. It continues to head lower, but I think at some point over the next few months, and more likely in the second half of the year, when investors realize that QE2 is ending and they get more clarity from the Fed, I think the dollar could start a slow but sure climb in the second half of the year.
If you had a small position in it, would you add to it?
In the TLT or the
UUP?
I just don't invest in it, and I think right now the trend is down in the dollar, and I think that the clarity it's going to be more clear Especially, the Fed meets next week, and that's probably going to move the dollar one way or another because the statement comes out Wednesday, and they're going to, make their policy statement, comment on the economy, and the same concerns are going to be there. But when QE2 ends in June, I think that the dollar could continue to strengthen. I can't say when it's going to happen. I can't say if I'd go, long UUP right now. Certainly it's in a downtrend. I would really wait for signs of institutional buying, wait for some heavy volume gains in the UUP before, just basically wait for the trend to change because it is still down.
Understood. All right, hey, I thank you.
Okay, Jim, thanks for holding on. Sorry about that.
Bye-bye.
Okay, we got done talking about Apple. Again, just an exceptional earnings report. Just to reiterate with Apple, this is a stock I think that still could break out. Again, I thought that the market action yesterday was strong. I think the Nasdaq and S&P 500 could try to make a move higher here, and that could fuel, a breakout for Apple. I have to remember, valuation-wise for Apple, this is still a stock that headed into earnings. It was only selling at 19 times trailing earnings and 13 times forward earnings. So the market was not giving it a multiple. PE obviously is higher today after its 9-10 point move, but this is a company that just continues to execute. And again, the iPad is really the growth driver right now. iPhone is continuing to do well in China, so I still like Apple very much. Chipotle Mexican Grill, another stock with a lot of characteristics that I like to see. I wrote a piece for Real Money earlier this year on the restaurant stocks when everybody was saying, well, higher food inflation is going to be a problem for the restaurants. They're going to start to lag the market. Food inflation is going to be a problem for the restaurants. Some are going to be able to pass along costs to consumers, and others may not be able to be. So Chipotle had a very good number. Their earnings were up 23% from a year ago. Sales were up 24% year over year to just over $500 million. But they did cite, pressure on margins due to higher food costs. So stock is trading up near its session high. It was down about 3% or so to 278, but it has rallied off its lows, and it's still holding above its 50-day moving average. So I think that's noteworthy. It is a heavy volume decline today. There's probably a little bit of institutional selling in the stock, but Chipotle is still one of my favorites. I thought it was a good earnings report, but the fact that margins are under a little bit of pressure is spooking investors today. BJ's Restaurants is another stock that I've been sort of pounding the table on in recent months. This is another California-based restaurant. Bottom line, the restaurants are a counterintuitive trade right now because, inflation is out there. Food inflation is out there. Gas prices are out there. People paying more at the pump. They're not going to be going out to eat as much. But don't tell that to BJ's Restaurants because this stock is up very nicely today, up about 6% or so to 46. Stock had a good, strong technical breakout. If you look at a daily chart of BJ's Restaurants, it was back on April 15th, tax day no less, where the stock staged a heavy volume breakout. Moved over right around $40 a share. Now it's trading up around 46. So this is an example of a stock that's a bit extended now. I wouldn't buy a stock like this late after the breakout. But if you had the stock on your watch list when it was consolidating gains, preparing for a move up, this would have been a good one to make money on. BJ's earnings up 56% year over year. Revenues up 19%. Food inflation not an issue here. So. Still like the restaurants. I think there are plenty that can still execute. We will be right back, folks. Back with you in just a couple minutes.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is now on sale at Amazon.com for only $27.88. If you have an interest in mastering any market with superior confidence, this book is for you. I will walk you through the subjective theory behind quality, volume, and cause and effect, coupled with the objective aspects of the Tiger-Gottlieb, all the while utilizing risk management and Tiger scaling techniques. This will give you the elements of a successful system that can be profitably applied to any stock, commodity, or future market, any place, anytime. I'm offering a complete educational program, including the book, for only $88. You'll receive a live 2-hour workshop in your city or online, where we get into quality volume, the ABC structure, as well as the never-seen-before Tiger-Gottlieb. These techniques will make you money on a consistent basis. You can go to TFNN.com to see when I will be in your city. Don't let Wall Street eat you alive. It's time for you to rule the markets. Go to TFNN.com and sign up for the workshop coming to your city.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve on the TFNN Radio Network. Heading into our last segment, just a couple of questions here on Chipotle Mexican Grill that reported earnings, some pressure on margins. Someone in the den is asking about the recent issue. It's been out there for a little while now that Chipotle had 600 or so illegal alien workers. Well, I mean, Chipotle is a very well-respected company on Wall Street. It has an excellent management team. The stock performance has just been extraordinary in recent years. Very well-run company. I don't really see this as being a major overhang for the stock. I think the issue right now is just the pressure on margins in the recent quarter. Chipotle is certainly going to take steps to fix this problem with illegal alien workers, and really don't see that being a major issue for the stock. Also, the stock is being added to the S&P 500. You could see some index buying as a result. So all in all, listen, Chipotle has a great track record of growth. A little hiccup in the latest quarter. Still like the company. Also, another question on Alcatel-Lucent. Normally, I don't fish in the under 10 universe. Alcatel is currently trading around $6.15 a share. Provider of telecom equipment and services to fixed line wireless internet service providers. Really, the price performance of the stock has been outstanding. It made a huge move. This was back. Let me just pull back here. This was back in February. Where the stock made a nice move in heavy volume, and stock shows a lot of good heavy volume price gains in recent weeks. It's holding above its 10-week moving average, so technically it's still sound. It recently crossed a swing point of 579, currently trading around 615. So to me, the stock doesn't look that extended. I don't follow the company. Again, I don't normally fish in the under 10 universe, but technically still looks strong. Institutional selling, really not much of it in recent months, but a lot of institutional buying. So market seems enthusiastic about this company's growth prospects. About 2 minutes left in the show. Let's just go over, since I'm not going to be on tomorrow, just looking at some economic data next week. Again, the Fed interest rate decision on Wednesday. Probably not going to be much of a change at all in the federal funds rate, but again, the Fed will comment on the economy, so we'll get more color there. Thursday, the first quarter reading on gross domestic product is going to be interesting. Estimates are for 1.7% growth in the first quarter. There are going to be a couple of more estimates to that, but the first estimate should come in at 1.7%. The economy grew at a rate of 3.1% in the fourth quarter, so bottom line, I think this economy is fine. Manufacturing data, retail sales, consumer spending, the positives seem to outweigh the negatives to me. Yes, unemployment is still high. Yes, there are a lot of questions about the job market. But overall, I think the economy is going to continue to improve, and I'm expecting more good things from the market. We may get a little pullback here and there, but I still see higher stock prices by the end of the year. Earnings next week, a big week of earnings. On Monday, Netflix is reporting. That's a stock I follow. Tuesday, we have Amazon, Panera Bread, Coach. A lot of fast-growing, high-growth names. Wednesday, we have Baidu, Shutterfly, and Thursday, one of my favorites, Decker's Outdoor. So, folks, don't forget, on the homepage of TFNN.com, check out Ken Shreve's Ultimate Growth Stocks. I just launched a newsletter with TFNN.com, and thanks very much for joining me. We'll talk to you next Tuesday.